Alrighty guys, welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about what's going on with these electric vehicle stocks. Should you buy them? Should you hold off and look for a better opportunity elsewhere in the market? So I hope you guys enjoy it. If you guys get anything in value, hit that like button, subscribe to the channel, because hey, at the end of the day, it really helps me when you guys do that. Not to mention guys, we do have a completely free chat room that you guys can, ask questions, or you can, look at my watch list at some of the stocks I'm watching. So make sure you guys check that out. I'll put a link to that down below. So starting off, what's going on with these electric vehicle stocks, right? The very first one we're going to look at is RIVN. Ticker symbol RIVN. You can see this is a recent IPO. The stock went from about $100 all the way up to $179. This is giving a crazy return of about 50 to 60%. Then from there, we had virtually immediate sell-off, selling off, establishing a little support near this 121 mark. Then from there, it just sold off even more. So you can see just a massive downward trend. Now, anytime you have an IPO, normally, historically, the stock is extremely volatile within the first week. So you can have a stock that skyrockets up, or on the flip side, it could easily sell off. So in RIVN's case, the stock popped up, sold off. Now, the biggest question a lot of people ask is, should you buy this? Now, a couple weeks ago, I would have said absolutely not. But given that it's establishing a little support near and around this 100 to about this $109 mark, you can see it's hit this price zone several times. This is establishing a little more support near here. I think right now a good strategy for RIVN would be dollar cost averaging. The reason why I say that is because RIVN carries a lot of potential, but on the flip side, it carries a lot of risk. The reason why is because, one, the electric vehicle space and electric sector in general right now is extremely volatile. There is a lot of competition. There's a lot of people and companies getting in and getting out. Virtually every, automobile company is shifting towards electric, and the ones that aren't are going to be going out of business, but every single one is. So RIVN's going to be it's going to have to establish some sort of niche in that space to survive. And given that there's a lot of competition, that puts more risk on RIVN. So it's definitely one dollar cost average, so you can get a good average price for your shares. Something that could easily go to zero, but also could easily go to 200. Just very volatile. Given right now, I don't see a swing trade or good opportunity just yet. That's why dollar cost averaging would be better. For swing trades, I always like to wait like a month or so just so we establish a little more charting, finding that support and all of that. And not to mention, RIVN doesn't make any money. So very volatile. Moving on to stock number 2, we have TSLA. Goes without saying, probably the most sought after electric vehicle stock out there. You can see lately we've had this beautiful run from about $800 all the way up to this $1250 mark. Now, that $1250 mark was definitely more of a major resistance that the stock saw. You can see it hit it, sold off all the way down to about that $1,000 mark. Then from there, it popped up again, another 15%, sold off. So right now, the stock is stair-stepping down. It's not like we're coming up to highs. So for this one, I think it would be better to kind of wait a little bit, or you could start dollar cost averaging or continue to. But I really think we're going to probably have a little more sell-off back down to that $1,000 mark. And that's where I would like to pick up a couple of more shares. The reason why that has a very hard support near and around that. So it's definitely one fantastic company. We all know Tesla. They're not going anywhere anytime soon. And not to mention, there is rumors of Tesla creating a some sort of cell phone or phone, which would be very interesting. So I'm super excited to see what happens with that. But moving on to the last and final one that I want to talk about today. Actually, we'll probably talk about a couple more, but the one that we're going to be talking about is Lucid Motors. So I believe I was just looking at it right here. Oh no, that's not it. LCID. It's right here. So you can see Lucid is another electric vehicle stock. This one here, we had this beautiful run, very similar to a lot of the other electric vehicle stocks. Stock went from 15 all the way to 61, started selling off. You can see it could be forming some sort of pendant right now, but I really think there's a lot more selling pressure than buying pressure. But overall, long opportunity for a swing trade. I would like to get in over about 53 to 61, or you could even hop into it, establishing 50 as support, setting stops at 48, risking $2 or $3 to possibly make 10 if it hits these highs. But right now there is a lot of volatility. Some people and some analysts are stating that it's overvalued, but it's one to at least keep on watch for sure. If I was going to go heavy in, I definitely would be buying in near that $44 mark. Establishing that support right here would be very, very crucial for a major buyout. Or you could just dollar cost average it if you want to pick up shares. The reason why I love dollar cost averaging is because you don't have to really worry if a stock's overvalued. All you do is you just be consistent with your investment. So if you want to invest, let's just say $1,000 into Lucid, all you do is you invest $100 a week or $100 a month, and over the next 10 weeks, 10 months, so you still invest the total principal of $1,000, but it's spread out into weekly or monthly or whatever you choose increments. So if the stock continues to go up, you have shares so you can make money. But on the flip side, if it starts selling off, you average down your shares, and it's a great way to invest in growth stocks, and I always highly recommend it. The last one that I want to look at is Ford, ticker symbol F. This is one that did establish a lot of support near 19. You can see hit that price level several times, major resistance right here at 20, textbook support and resistance. So right now you could hop in at about 1970, virtually risking about 2 or 3% to possibly make about 4 to 5, which is not the greatest risk and return, but Ford did pay their dividend. So that's very, very crucial to Ford. Everybody loves Ford dividend. So I'm super excited to see where this one goes in the next couple of weeks, if not months, because this could be a fantastic electric vehicle stock. Ford started paying off a little bit of their debt, which is causing the stock to become more valuable because the company will now have more cash and lower debt, which is all good. So super excited on this one, but that's kind of what's going on in the electric vehicle space. So hope you guys enjoyed it. If you did, hit that like button, subscribe, and we'll see you guys later. Don't forget to check out the course, and remember to stay happy, stay positive, and stay safe. Take care.